what I wanted to do, maybe for the next 20 minutes or so, is to share my thoughts on why I think every small or new business is not a startup. Right? So naturally, I will, before I end the talk, help you understand what is a startup. Right? So that's my commitment and that's my promise to you guys. So if I can have 20-30 minutes of your undivided attention, I'll do two things. One, explain why every new business or small business is not a startup, and what is a startup. Fair deal?
Yeah.
All right. Let's start with a story, and I'm going to use Salma and Khuze as my sort of entrepreneur archetypes here, right? So let's say Salma comes to me and says, "Hey, I'm going to put together a fine dining restaurant business, and I'm going to invest 10 crores of money to do the decor, furniture, the kitchen, hire fantastic chefs, multi-cuisine. I'm going to give a really good fine dining restaurant experience right here in Coimbatore." That's the pitch she makes to me, and then she says, "Yeah, well, can you help me raise 10 crores? That's the capital she wants. Right? Now, what's the big question in my mind? So many restaurants are there. Why do you need another one? What's the big question in mind?
ROI on the 10 crore.
The difference. What is unique?
ROI. Right? So the real big question is, how does this business make profits? Because if it does not make profits, can I, as the investor, make ROI? Certainly not. Yeah, absolutely not. Right? Now, if I ask this question back to Salma and says, "Hey, how does your business, which is a restaurant business, a fine dining restaurant business, how does that business make profits?" And she'll give the answer, right? The answer is very simple, right? I'll have so many number of people walk into my restaurant every single day, every single week, every single month. Here is what I will charge them for a plate. I have a menu, I have buffet, I have a la carte, I have multi-cuisine. Here is the average price per guest, or bill value per guest. And if I can keep my costs of running that restaurant and serving this clientele with an amazing fine dining restaurant experience, revenues minus costs equals profits, right? Okay. The next big question on my mind, she says this answer, the next big question on my mind is this: what is the proof? What is the proof? Is this the first fine dining restaurant in the universe? Is it?
No.
No. You got 3 down the street, right? You got 20 in this town. You got a few hundred in a metro like Bangalore. So what's the proof? The question I'm really asking is, has this been done before? Even once. Right? Has this been done before? Even once. By that what I mean, has this fine dining restaurant made profits even once before Salma comes to me with this business plan? Right? Okay, let's move on. Khuze comes to me and says, "Fine dining restaurant, yeah, with a twist." I ask him, "All right, what's the twist?" He says, "Well, I'm going to do a fine dining restaurant without a kitchen. Yeah, I'm going to do a fine dining restaurant without a kitchen." And I say, "Okay, tell me more. I'm curious." Right? He says, "People want to be surprised." Right? If I put a fine dining restaurant and I say it's multi-cuisine, Chinese, Mediterranean, American, European, continental, whatever, right? There is no surprise. You pretty much know what menu you're going to get, right? There is no surprise. But he says, the twist in my restaurant tale is that no one knows what you get. So if you're someone out there with lots of money in your wallet and saying, okay, now let's go get surprised this weekend. So let me take my family out on a Friday evening or Saturday evening and get surprised. And I'm wanting to pay for that emotional value. Right? Now his idea is to get all chefs in different five-star hotels in the town, get some chef enthusiasts. What if Vivek here was one such chef enthusiast who's not doing chef work for a living, but prides himself in making pasta like some of the best Italian pasta, right? Kuse says, I'm going to make him make money, right? So I'm going to open it out to not just one or two chefs in my kitchen, but any number of chefs. Chefs like Vivek, who can cook at his home with some advanced tools that he has. Chefs in other hotels, other five-star hotels, I'm going to get their food in. But I don't know what I will be serving this Friday, because it clearly depends on whether Vivek chooses to cook this Friday, Kannan chooses to cook this Friday, Salma chooses to cook this Friday, I don't know. But if you want to get surprised, come. And he says, if I take out the kitchen part of my business plan, I take out 5 crores. Yeah? I don't need 5 crores. And he says, you know why? That's going to be exciting for you as an investor. It's because it's much less risk, right? Between 5 crores and 10 crores, clearly, which is more risky, which is less risky. So that's his sort of pitch to me. Okay? So let's go back to the same questions. How does this business make profits? Well, the same stuff, right? Yeah, we'll get so many number of people to walk in on every day, every week, every month basis. Here is how much I'm going to charge them on an average. Here is this average guest bill value. I have to keep my costs lower than my revenues, and I make profits. Okay, sounds like a plan. What is the proof? The question again, is there one fine dining restaurant without a kitchen somewhere in the universe that you know of that has actually worked and has actually made profits? You see the difference between the case with Salma's fine dining restaurant and the case with Kuse's fine dining restaurant. Salma's fine dining restaurant does not require proof, because there is proof out there already. Whereas Kuse's fine dining restaurant with a twist requires proof, because there isn't one such restaurant that I know of that exists and has proven that you can make profits. So, in other words, Salma's fine dining restaurant business has a business model. And that business model is proven because it has worked many a time in different parts of the country, different parts of the town, and you have enough proof points. Whereas Kuse's business model, the fine dining restaurant without a kitchen, has a twist. It needs proof. The proof that this business model can make profits. In other words, when Salma is pitching her business case or plan, I know the business model has been proven. In other words, if I ask her the question, what is your business model? Let's understand this question. When an investor asks you, what is your business model? What is he expecting to hear? How does this business make profits? The universal equation for profits is very simple. Profits equals revenues minus costs. Profit equals selling price minus cost price. One that we learned when we were 7th standard, I think. I don't know, when I was in 7th standard, maybe you guys younger must have read it earlier. Yeah? But it's not an equation, it's a bit of spirit and matter and story behind those numbers is what your investor wants to know when he says, okay, what is your business model, right? So the business model, in the case of Kusema, in the case of Salma, sorry, already exists. So she can start with a business plan on the back of the fact that the assumptions in her business model are proven, and she can execute that business plan for profit. What does that mean? Yeah, raise 10 crores, go find the right location, set up a restaurant, 2,000 square feet, whatever, find the right place, maybe rent a building or own it up, set it up, take 6 months, complete the decor, complete the furniture, get the kitchen organized, hire the right people, the chefs, do marketing, do advertising, and launch day, have a blast of a party in the town, bring the big socialites, the elite of the society into your restaurant, word is spreading out, people will start screaming in. Right? Start running it for a month, 2 months, 3 months. You will start making margins for sure, what are called unit profits. And then over a period of time, as you keep running this repeatedly, over and over and again, every week, every day, every week, every month, restaurant runs will lead to profit. It will first break even, which is monthly, weekly cash in is equal to cash out, and then it will start making profits, and then this profit will recover all of the costs, the fixed costs and the interests and all of that which has gone in, and the business will break even, and that's when you have ROI equals 0. And then from that point onwards, everything that she makes in terms of profits, I can hope to, as investor, get a return on my investment. So for a business model that is proven, you can start with a business plan and execute for profit. But in the case of Kuse, with a twist, the business model is not proven. When I say not proven, what do I mean?
I mean, I'm not sure whether you'll get a profit or not.
And several things have to happen before profit happens, right? What if people don't want to be surprised? In other words, ask this question: what can go wrong in this business? Right? What if people don't want to be surprised? What if enough number of people don't want to be surprised that you have a reasonable inflow of clients, so many orders per day, so many orders per week, so many orders per month? What if enough of that doesn't happen? Isn't that the biggest risk in a business? Right? And when is an idea validated?
When you get a customer.
No. When someone pays for it. Right? That's the only time an idea is validated. Right? When someone pays for it. When I say pays for it, it is a product or a service or whatever it is that you are offering. In this case, that fine dining restaurant experience, that's a service. Right? So, what can go wrong? Plenty of things can go wrong. Right? Okay, what if there is enough and more people who want to be surprised, who are happy with this? Yeah, let me go to this restaurant where I don't know what I'm going to get. I want to be surprised. What if that day Vivek has a bad day with lasagna and he messes it up? Right? And he calls Kuse and says, hey, buddy, not happening. Take lasagna out of the menu today. Right? So there are several things that can go wrong. What if he cooks up probably his best food, sends it over on a cart. Shit happens in this town, everywhere in the country. Road traffic jams, potholes in the road. By the time the pasta comes, it looks like pizza. Right? Several things can go wrong. So it needs proof. Right? It needs proof that on the demand side, as well as on the supply side, things will not go wrong. Because if things work out on the demand side, if things work out on the supply side, you're getting revenues. And if you can keep your revenues more than your costs, or keep your costs in check with your revenues, what are you doing? You're not making profits, you're on the path to making profits, right? At least you know that yes, this thing is going to work, right? So which is where you are exploring for profit, right? So if I see, if I hear a business pitch, I'm asking just one question. Is this startup ready to execute for profit? Or does it have to explore for profit, for proof? Because if proof does not happen, profit will absolutely not happen. There's no way. It's a scientific process. Starting up entrepreneurship is absolutely more science than is art. So there is a scientific approach to how startups should explore for proof. And that's the area in which we as Forge have done a lot of work, and we've created methods and tools, and happy to discuss all of that later. All right, so let's move on. So what proof? Proof of business. So if I hear people saying, I'm building proof of concept, you can clearly understand how much of a respect I have for that stuff. Right? I'm expecting proof of business. When do you have proof of business? Sorry?
Paid customer.
When I know how this business will make profit. Okay, let me put it the other way. Why do business? Why do business, Jose?
The socialist in me would say to make a difference, the capitalist in me would say to make money.
The realist in me say do both. Right? Because if I have to make good, make it bad, make all of those nice things you said, I can't live at the mercy of somebody else's check, can I? Right? If I run a profitable business, the question is not too much less profit or too much profit. We're not talking about that, of course. That's when the capitalist in you will wake up, or the communist in you, or the socialist in you will wake up and say, oh, that's wrong. But if I can do a little bit of surplus, and I can use that to invest back into my business and keep it continuously improving, right? Then I don't have to live in the mercy of somebody else's check, right? And that's when I have proof. And that's the only reason why I do business, is to solve problems profitably, solve problems sustainably. Otherwise it becomes a 1-week act, or a 1-month act, or a 6-month act, or in the case of housing.com, a 1.5-year act. Right? Proof that the problem can be solved profitably. How many of us think in terms of, can I solve this problem profitably? And that's the only thing out here I'm trying to achieve. Can I solve this problem profitably? Yeah. I'll take questions at the end of it. Is that okay?
You asked who would. You asked who would be interested in doing, who thinks that way. That's right.
Okay. Yeah, who thinks that way?
No, I mean, among the people, I think that way.
Okay. Rhetorical questions. Yeah. Okay. So what is a startup? An effort to build proof that the problem can be solved profitably. And that's it. An effort to build proof that a problem can be solved profitably. And this effort cannot be a lifetime's pursuit. Right? You can't remain a startup forever. You can't, I can't accept a 5-year-old startup. Right? You have to be a startup in a meaningful sense in terms of time, and and as well as the cash that you spend. And I use the word cash because you know why? It comes straight off your bank account. Right? Capital is somebody else's. What you put in your startup is cash, which otherwise would buy vegetables at home or popcorns for your daughter in a movie. That's what you're putting into your startup. So it's cash. Right? So it's got to be meaningful. You can't build proof with, yeah, give me $10 million and I'll do proof. No. You can't say, yeah, I'll do this for the next 3 years, come back after 3 years, I'll give you proof. No. It's got to be time bound and it's got to be cash efficient. Right? So a startup, when it starts with an idea, it goes towards building this proof of business, and that's a startup. So in other words, if you come across a business idea, business plan, business pitch, and you ask yourself, hey, does this really require proof? Or is there anything and everything about the startup, both on the demand side as well as on the supply side, proven already? Why call yourselves a startup? I mean, I understand it's the most sexiest thing to do in this state of affairs in the country right now, with the government having announced what is a startup, and there being so much of hue and cry about startups, and there being a startup policy and all of that. But leave aside all of that. Just get down to what do you, as a startup CEO, have to do every single day. What activities should you be doing? What's the goal towards which you are doing these activities and you hope to achieve that goal? That goal is, I am trying to build proof that this business will be able to solve this problem properly. What's the problem Fuse wanted to solve? Apparently, people who wanted to get themselves surprised are not able to get themselves surprised. Yeah? Life is too monotonous. Yeah, I go to the same damn restaurant and I get the same damn food. I want to be surprised. That's the problem he wants to solve. It's an emotional problem, right? It's what you call hedonic value, emotional value. I want to have a high by going into a restaurant where I don't know what's going to be served, and I'm going to be surprised. But how do I solve that problem profitably? And how do I build towards this proof that I'm able to solve this problem profitably? That goal should then sort of determine what activities you perform towards achieving that goal. Everything in terms of who you hire as your co-founder. So in this case, if Fuse wanted to build proof, who is the first person he will hire? A chef. Right? Or will he hire a bunch of Android developers who will help him put a nice website, an Android app? And I've heard people do that as well. But for example, I met the startup in Delhi. It's called Legal Vegan. You can look it up. Right? The guy came running to me and said, you know what, here is this thing and I'm doing something. Apparently divorce lawyers spend a lot of time doing useless paperwork. I mean, I wouldn't know that I'm having a very happy marriage. Right? But apparently they're spending a lot of time doing a lot of paperwork. But what does it do? It takes time away from active litigation, which is where the money is. Right? So this guy is saying, I'm going to do all of that back-end work, IT work, customer client engagement. I'm going to put Naveen here, hopefully not, know somebody who wants a divorce. Right? We'll say, yeah, use this legal app and get in touch with a lawyer. It's like a marketplace for divorce. Right? This is his big idea. I said, great, wow, awesome. What's the proof you're trying to build? I'm building an Android app. And I said, I have this iPhone. Sorry, iOS app will be ready in the next 3 months. Sorry, I just couldn't do a demo for you. I said, yeah, all right. Now, what's the first thing that he has to do? Who's the first co-founder in his team? Lawyer. Divorce lawyer, right? So that's the only person on this earth who will help him build proof. Yes or no? So this is how magical things become when a startup thinks in terms of, hey, what's that proof that I'm trying to build? So that I can solve this problem profitably. That is what matters. It's not just solving the problem, it's solving the problem profitably. Right? To So I'm just going to put a much bigger definition, and I'm going to talk about each of these highlight points and help you understand a little bit with more clarity. A startup is an effort to build proof. We've discussed what that building proof is all about. That this innovative technology, product, or business idea, innovative. Why stress the word innovative? Because it's doing something not done before. That's why it needs proof. Right? And that doing something new could be a technologically new thing. Right? For example, it could be a new IT hardware software combination technology which can help drones fly. Right? It's a technology. Has it been done before? Probably not, which is why it is new, it is innovative. Then you're saying, what problem is this idea going to solve effectively, but also profitably? Right? So this new technology idea, this new product or service idea. In the case of Kuse, it was a new service idea. Right? Sometimes you can even say it's a new business idea. It's a new way of doing a restaurant, fine dining restaurant. Right? Everything remaining the same. It's the same fine dining restaurant experience, fine dining experience, but the business process is different. Right? It doesn't have kitchen. So any new technology idea, product idea, service idea, or a business process idea naturally has to be solving some problem, which is why it exists, or which is why it has to exist, right? And not just solve the problem effectively, but can you do so profitably, right? So a startup to me is an effort to build proof that this innovative technology, product, or service, or business idea can not only solve the problem effectively, but it can do so profitably. So what's an investable startup? First, it's got to have the potential for doing something big. It's got to have the potential for doing something big. So this innovative idea to solve this problem that has not been solved before, or needs to be solved in a much better way. Can this idea become big? When does an idea become big? When it has the potential to become a big business. Right? So Warren Buffett says it in his own very pithy ways. If you want to build $1 billion business, solve $1 billion problem. Right? So you've got to think big. That's potential. Right? A potential for a profitable, scalable, and a high growth business model. Right? But as you keep that potential in mind, you have to think in terms of what is the proof. Right? What is the proof at which Google looked like the next $100 billion company for Sequoia Capital? What was the proof point? The point was 5 million new visitors on Google.com the last month. 5 million impressions. If I were to talk in terms of advertising industry, it's 5 million new impressions in 1 month. That's the number Eric Schmidt took to Sequoia and raised $100 million at a valuation of $1.5 billion. Right? All right, now did Sequoia get a bad deal? In hindsight, absolutely not. Because when I stand today, Google, now Alphabet Incorporation, is valued at about $400 to $450 million, give or take the fluctuations in stock prices every single day. So roughly between $400 to $450 billion of market capitalization is Alphabet today. What does Sequoia stake in that? Yeah, about 15 to 20%. So was it a bad deal for Sequoia to invest $100 million at a $1.5 billion valuation? Absolutely not. So they saw the potential, right? Right? Did they actually think, yeah, in the next 10 years, well, actually it was 2001, 2002. So the next 15 years, right? In the next 15 years, will this company become a $400 billion company? Not really. They must have said, yeah, but at least it's going to be a $100 billion company at some stage. But what was the proof for that statement to look true? 5 million unique impressions just last 1 month. What it meant for Eric Schmidt, who comes with 30 years of prior corporate, big Fortune 10 corporate CEO experience, is a huge freaking advertising business model. 5 million impressions in 1 month is not easy to get if you're coming with some kind of a knowledge of how the advertising industry works. And that's the proof which made Google look like this next big thing. Thirdly, what is the plan you have to build that proof? And that's all that matters. Right? So if you're on the first date, don't discuss the color of the curtains in the bedroom in the house that you would buy after 10 years. Doesn't make sense. You're on the first date. Let's try to last the weekend. Right? So the point is, if you are pitching your business idea to an investor, and if you want to look like an investable startup, you've got to have these 3 things in mind. Do I showcase potential for something big? Do I showcase or talk about the proof that will give me confidence that yes, this potential does look likely? And what is my plan to build towards it? So it's 3 P's, right? Potential, proof, and plan to build the proof. And beyond the proof point, how does it matter? So if you think in 6 months to 1 year, you can meaningfully build proof for this idea that you have, then build a plan to build that proof in that 6 months to 1 year, and talk about what kind of money you need to be able to build that proof. Because money from the investor will help you invest, expand, and undertake those activities, basically execute your plan and help work towards proof. And also think in terms of how early stage investors, I don't want to use the word angels and seed investors and this and that. It's fairly confusing. To me, there are only 2 types of investors. Early stage investors who invest seed capital, late stage investors who invest growth capital. Right? So early stage investors who invest seed capital, how are they thinking? They're saying, I am looking at startups with a new exciting idea of solving a significant problem with a significant potential, and they need cash, they need funds to be able to build proof, and I will help them build proof. That is the fundamental thinking behind early stage investors. I will put money into this startup so that this entrepreneur with this money can go build proof for this big idea. And once he's able to do that, I will take this startup, this entrepreneur, together we will go to that late stage investor who, on seeing this proof, will invest in achieving this potential. That's the only way the world works. All shades of grey in between are exactly that, shades of grey. Right? So nowhere you fit in. Right? Sometimes the best thing to ask a potential investor is exactly this point, this question. Why are you investing in these sectors or in this sector? If he does not answer this, which means if he does not give you an answer in terms of here is the potential I see in this sector, right? Here are the kind of proof points I want to build. Because if this proof happens, then I can go raise funds and scale up. If he does not give that crystal clear answer, don't waste time. Move on. Yeah? Okay, just before I close, are you elevator ready? What does this mean?
30 seconds.
Elevator pitch. Right? So, in 30 seconds, can you explain what your business model is? And what's the template for that 30 seconds? Problem X is solved with solution Y, making profits via C. This is the problem. Here is how I'm going to solve it, not just effectively, but also profitably. That's all you can pack in 30 seconds. You can say anywhere from 30 to 50 words in 30 seconds. That's the elevator pitch. If you can get down your business idea, business plan, business pitch into this 30-second format, it helps you with enormous clarity and focus. And you can be rest assured that if it's in a competition, your judges, if it's in real world, your investors can call this bluff very well. Right? In 30 seconds, if you can get this message out in a very convincing manner, it doesn't have to be flowery, hi-fi English words that I have to look up on the dictionary. It can be words that anybody can understand. In those simple words, can you explain what is the problem you're trying to solve? How do you intend to solve the problem, not just effectively, but also profitably? Done.